Good morning, everybody, and welcome to the Daily Energy Markets podcast. It is Friday the 13th. Oh, I just realized that in the voodoo land, that's meant to be bad luck. But let's see. Not bad luck for the oil markets because Brent crude oil is now trading up a solid 0.5% today, continuing that recovery, now holding on to 72.33 on Brent. Let's kick off this morning with Robin Mills, CEO of Kamar Energy. Robin, welcome back. Have we now seen the lows from the year? Brent has stared down 60-something oil and won, and it is now recovery time. Your thoughts on where the direction of travel is this Friday, 13th?
Yes, thanks, Sean. Hi, everyone. So I thought the sell-off was overdone anyway, so not surprising we've bounced back a bit. Um, so we're actually at a low since December 21. So we've broken out of this very stable trading range that we'd been in since then. So I think not surprising we've rebounded a little bit. Obviously, there are some supportive factors on the supply side with the loss of some Libyan production and the shut-in the US from the hurricane, which is only going to be temporary, I think. But that's helped prices bounce back a little bit. So yes, I think we've recovered from a sell-off that was overdone, but the overall situation is not still not super encouraging, and that's really on the demand side. And we'll obviously seen the IEA's latest commentary on China and being quite negative and cutting its outlook again on Chinese demand. And OPEC also modestly trimming its still very high demand outlook. So I think that until the Chinese demand side improves, we're not going to see a substantial recovery in prices.
Andy Lavin, Managing Director at Econs. Andy, come to the end of the week. It is Friday. It is the week in which we had the big APEC, the annual gathering of the world's energy market stakeholders in Singapore, typically a big date on the calendar. It was quite bearish there. A lot of talk that prices would be staying in the 60s, which is what it hit. Brent dipping in for the first day and the only day of the year that Brent opened in the 60s on Tuesday and then has recovered. But all the bearish tones out of Singapore, do you concur with them, or are you bored with Robin that this was overdone and we're getting back to natural levels? Your thoughts on direction of travel?
So I think it depends whether you look short term or long term. And essentially that was what the comment that Robin made. So longer term, if you stand back, there is not a problem with oil supply. There is plenty of oil, they're just not pumping it. So if there's more demand, they can pump to supply. The problem is all on the demand side at this point in time. And with China looking to be at least in the doldrums for a while, and it's not clear where the rest of the world is going in terms of energy transition, their real demand for oil, there has to be a question over the demand side that is going to keep the pressure downwards in at least the short to medium term.
Let's go to Venezuela, where we have Jose Chalhoub, LATAM consultant with Orinoco Research. Jose, let's start with what's the latest from Venezuela. We've seen all the opposition figures flooding or seeking refuge in Spain. The election results sort of going all over the place in terms of what was the actual outcome. What's the state of play at the moment, and is there anything going to change?
Muted.
No noise. Yeah, muted.
I'm sorry. Yeah, I'm sorry about that.
There you go.
Okay, well, yeah, this was very much expected. I mean, that Maduro was not going to concede after a landslide victory of Edmundo Gonzalez by 70 to 30%. And well, this was pretty much was expected. Now he requested asylum in Spain. after negotiation. I mean, there are different allegations if there were negotiations or if this was something voluntary or something requested by Edmundo Gonzalez, aside from what Maria Corina Machado, the leader of the opposition, who was banned by the government and not participating in the elections. But definitely, this was something very much expected. Maduro is not going to concede anything on these elections. And as we've spoken before, I mean, if the armed forces are not part of the equation in any political transition, you're not going to see anything different happening here in Venezuela. With even with international pressure that we've seen, that hasn't been enough to prompt any significant change here.
And in the middle of all of that, where does that leave the PDVSA oil production, the sanctions with the US? What's the outlook for all of that in this sort of tumultuous political backdrop?
Yeah, it's interesting question because there was a recent change of authorities. Maduro in a reshuffle changed the authorities of PDVSA and the Ministry of Petroleum. First time in many years that he kind of named two different authorities for Venezuela's oil sector. One for the Ministry of Petroleum, who was put in charge under the current Vice President Delcy Rodriguez, and the presidency of PDVSA under the charge of former Vice President Hector Obregon, after Pedro Telechea was fired and sacked of his former role as president and Ministry of Petroleum, even though that he carried out a decent administration kind of in the last couple of years, prompting a slight recovery of oil production, even though that was significantly much due to all what Chevron has been carried out in the last recent year. But definitely, I believe that no political situation has to be impacting if you will, the steady recovery of Venezuela's oil production, even though that in the last recent months it has kept being steady at 870,000 barrels per day. But definitely, and I believe that the new authorities named by the government should continue the past trajectory of Pedro Telechea administration in PDVSA.
Robin, we had OPEC Plus decision last week to postpone their plans to raise supply from October the 1st. The 8 countries within the wider OPEC Plus 22 countries that had previously made the decision to raise supply from October 1st have postponed it for 2 months. Is that the last card in OPEC Plus's deck that they can play in terms of tackling this, what was 60 something earlier in the week is now hanging on to 70 something plus? But does OPEC Plus have any more cards to play in this fight to keep the price up to maybe their sweet spot of 80?
I think OPEC Plus had, first of all, got itself into a no-win situation. When they decided to delay the cuts, that was taken as a bearish sign, and prices fell quite sharply. But if they'd extended or if they'd continued with the plan to ease the cuts, then the market would have seen more supply coming. So the price would have fallen whatever. I think they were, they backed themselves into a corner on that. And I think they also, of course, faced the problem of the overproduction by 3 of the members, by Russia, Kazakhstan, and Iraq. And those countries all submitted compensation plans to make up for their previous overproduction. I'm pretty skeptical if they will actually comply with those, and particularly in the case of Iraq. So again, OPEC, I think, faced the situation of having these 3 kind of difficult members, and being stuck with the situation of, well, do we go ahead with easing the cuts, and that gives those countries a little bit more room, and they could probably make up on the compensation side. But
just on that point, Robin, just the Kurds, apparently the Kurds are now producing exporting 250,000 barrels a day as reported Is that inside or outside the Iraq numbers?
Well, that's inside the Iraq numbers for, that the secondary sources and so on rely on. Now, Baghdad says, well, we don't control this production, and Baghdad has tried to put a bit of pressure on the Kurds to stop, cut back, and not successfully so far. There's more cards they could play on that. But if they don't succeed in curbing that production, then and southern Iraq doesn't cut its own production in compensation, then obviously Iraq will overproduce. So this is an internal problem of Iraq, and Iraq, partly uses it as an excuse for overproducing, but it's also a genuine problem.
Andy, it struck me sort of looking at the gathering in Singapore and APEC and the different noises that have come out regarding the direction of the oil markets, and even pre-APEC, that there seemed to be some sort of divergence between the physical oil traders and the sort of paper oil traders, the likes of Curry at Carlisle being quite bullish, the physical oil traders of Trafigura and elsewhere being quite bearish. Your thoughts on that analysis and what the difference is there, and if indeed I'm reading it completely wrong, your thoughts?
So I think there's always a tension between physical and the financial side of the oil business, especially crude, because it can be traded so far out in the future. And I think that the tension really is in that longer term versus short term. So if you're trading physical barrels, you're trading in the short term. You want to know what's going on now. You're not trading VLCCs in 10 years' time, whereas the financial markets are looking to the future. So I think tension it may be not the right way because of that time difference. So I would look at it in the short term. There is no problem with supply. It's all about demand, and therefore there's a downward pressure. Longer term, I still don't think the world has got its head around how you replace all of these requirements for oil in some of the products, in some of the transport and everything we use today and rely on. And in that world, if you start to see kind of large multinational companies cutting back on their production, you're going to see declining oil production in the long term. And therefore, the demand is going to be much bigger than the supply side. Now, the totals may be down, but the demand and supply balance will flip around. And then you can see in the longer term how the price of oil will go up significantly because there's just not enough of it around. And people have moved out the oil space, but we still need to fly airplanes.
Well, on that sort of divergence, I mean, it strikes me that the paper markets, the financial markets, could pull this oil market back up, even if the physical traders are bearish to the outlook. IEA reporting yesterday, revising down the demand growth this year. The paper markets may look at $70 Brent and go, that's a buy. Easy $10 upside.
Yeah, absolutely, because they'll buy and they hold. And I think, when we were teaching, what you do is you kind of say the longer term, the oil price will go to the marginal barrel, will go to production cost. What happens in the short term is in essence disconnected, but inevitably it's connected in the long term, so it can't move too far away. And as you start to see the financial markets taking positions closer and closer, then inevitably the kind of influence that the financial markets have on the short term make a fundamental difference. And it's kind of like you look at what happened when WTI went negative, right? That was a convergence of all of everything coming together at one point, and then it just has to wash out. So you're absolutely right. As the short term becomes more and more disconnected with even the short to medium term in the financial markets, people are going to say, like Robin said, the sell-off was overdone. It's going to come back, right? So longer term financial markets are moving in one direction. Short term financial markets will inevitably look at the volatility, look at the moves, look at the detail, and kind of say, yeah, but it's too far. Everybody's sold. I'm going to buy.
Jose, one of the questions, obviously, as we've been talking, is the demand outlook for China. is even more subdued than had previously been anticipated. But on the supply side, the obviously big gargantuan efforts by OPEC Plus to keep supply constrained, but new supply continues to come to the market outside of OPEC Plus control, and that is concentrated in your neck of the woods there in Latin America. What is the outlook now? Guyana, Brazil, even El Norte, US, ultimately a lot of new supply coming from your neighborhood. Is that being
Yes.
realized?
Yes, absolutely. I mean, you also have to consider Argentina under Javier Milei. Javier Milei has an ambitious program to enhance foreign investments for the next couple of years, to enhance investments in one of the largest shale gas iconic fields, such as the Dead Cow field or Vaca Muerta. You also have Colombia. Colombia, even though that is experiencing some slight problems with Gustavo Petro's anti-oil instance, but Colombia has been seeing quite some improvements in terms of its oil production. Consider also Venezuela, because Venezuela has been also an oil exporter to China under different mechanisms. But yeah, definitely it has been another oil exporter to China. Brazil is another example, over 2.5, 2.6 million barrels per day. Brazil is definitely another player to keep on consideration. And of course, the Guyana factor. Guyana is poised to produce more, up to 1 million barrels per day, I think by the end of this year. But also you have to consider the different political and landscapes in each of these countries, how for example, in Guyana, this emerging richness of oil can be impacted by the lack of organization, the lack of legal frameworks in these countries, especially Guyana. But yeah, definitely, I believe that the landscape in South America is tremendously important, but it all comes down how politics can or cannot trump all this.
Robin, there was one number this week in which OPEC and and IEA agreed on, and maybe it was the one number all year they've agreed on, and that was that demand was reduced for the demand growth for 2024. IEA reduced it by 70,000 barrels, and OPEC also reduced it by 70,000 barrels. But the subsequent number, what they reduced it to, IEA to 900,000, being the growth number for 24. OPEC is still at 2 million barrels a day of growth forecast for this year. What's your thoughts on that? How do you explain that? Where do they see that?
Yeah, look, and we thought this divergence, it's been a divergence for a while. We thought that it would narrow over the course of the year. And, we thought OPEC perhaps was, OPEC was then clearly over optimistic. But IEA was perhaps a bit pessimistic, and the two would come close to each other and probably would end up with something somewhat above the IEA number. But as you point out now, both are cutting their forecasts. So the divergence isn't closing, but we're trending lower overall. Look, I think probably even the major OPEC countries don't really believe that forecast anymore, and their actions clearly show that. If they really believed there was 2 million barrels a day of demand growth, something would be very weird in the market given how far we are into the year. But anyway, they wouldn't be cutting production or maintaining production cuts. So I think look, the IEA number perhaps still looks a bit pessimistic even with this, and now more with this reduction, but the IEA was then clearly directionally closer to where we're going to come out. And they and a couple of others also were right on being so bearish on China this year. That I think, as Andy's pointed out, this is really probably the crucial question over the next few years. Where is Chinese demand going? Are we close to, or have we reached the peak of Chinese oil demand?
Well, we had the CEO of Vitol
of
Vitol in Singapore this week saying that this is the year of peak oil gasoline in China.
Well, yes, I think that looks very convincing, because look how strong the growth in electric vehicles are. 52% of new vehicle sales are electrics and hybrids, and and that's only going to increase. And then the shift away from diesel in the trucking sector and being replaced with compressed natural gas. So another big shift there. And even the jet fuel side, that's been more promising, but even the jet fuel side is a bit weaker because of the build out of the high speed rail network. And the bright spot has been petrochem, but the petrochem industry overall is struggling with overcapacity.
Let's go to the survey question, which is echoing the earlier comment. Brent crude oil has fought off the $60 handle and survived with $70 floor now bedded in. $70 floor bedded in. Face down 60 something and 70 is bedded in. That's agree or disagree, i.e. we've seen the lows of the year or not. Andy, I wanted to get your thoughts, where we're at the oil price from the point of view of just the financial engineering from a trader's point of view and for market actors. We've two events that I wanted to get your view of. We've got the Fed about to reduce the price of money next week by 25 basis points, 0.25% or 0.5%, seems to be the debate, not if they will, but by how much. And you've got this lower oil price, $70. So all in all, the trading, plumbing, cheaper money, less credit required because the cost of the total barrel is lower. What sort of impact could those events have on the outlook for trading and traders?
Volatility, basically. I mean, it encourages activity, but you also then have to look underneath the bonnet, as it were, and say, yeah, but how's the engine moving? Do we have the right supply-demand balance? Are people actually using it to buy products that actually ultimately needs to have that oil supply come forward? So I think this is the challenge of the world we're in, is that you can very much see people will pick on one thing and actually go with it and then go, oh, no, we went too far, and we come back. This is the tension between the financials and the physical market, because physical market is driven by real activity. Financials typically are driven by sentiment. It's what do people think is going to be going on. So I think certainly from the developed world perspective, everybody wants base rates to come down. They want to see growth moving on. They do not want to see developed countries go into recessions. So they want to see that positive energy. The challenge is, how on earth do we balance that against the activity set that's going on outside in the rest of the world? And what does it mean for supply and demand in the rest of the world?
Jose, there is obviously on the back of the election result denial by the government in Venezuela that the outlook for the U.S. government to continue with sanction relief and re-engagement on the oil industry side is dead in the water. Is that indeed the case? Could we have a counterintuitive? I remember when the sanctions were lifted in the last year for 6 months, you had told us that the hotel lobbies in Caracas were full again of American oil executives. Are they all gone now?
No, not precisely. I mean, they're staying. They're still staying, but they're assessing. They're more cautious about what's coming. Recently, I think yesterday, we saw how the U.S. OFAC sanctioned, I think 15 Venezuelan authorities between military, electoral, and members of the National Tribunal of Justice. And I think that's what's coming. And in terms of the difference of the sanctions coming, well, of course, we have to see what happens in the U.S. on the elections in November, and how any potential new administration will come regarding its strategy on Venezuela. But I think that the strategy should be different in terms of sanctioning, if they're going to sanction. And they should kind of differentiate the type of sanctions, not against any type of oil sector, but the sanctions should be targeted like yesterday, like the sanctions imposed yesterday.
On the the obviously the previous regime before there was some sanction relief for 6 months ahead of the election. Obviously, for not many years, the Venezuela was under sanctions, but like many countries under sanctions, Iran, Russia, they're still getting a lot of oil to market. Can Venezuela still, whatever comes next, can they still get some more oil to market?
Yes, definitely, but the challenges are huge still. I mean, we will still need a lot to do, a lot to invest. And the one thing that you need here is trust in the local legal framework, which is still there's not. Even with the new administration of Maduro, of course, we'll have to see if he changes all these type of economic legal frameworks regarding the oil sector, maybe some sort of Maduro 3.0 or something of sorts. But of course, we have to see if any political transition will really happen here in Venezuela. But yes, I mean, we can bring extra barrels to the market, but not in the short or medium term.
Robin, just wrapping up with what OPEC Plus could be doing next. Of course, 2 months is nothing, and these increases, the sort of removal of the cuts or the increase of supply that OPEC and OPEC Plus announced earlier this year in very granular detail. Every month, every country's allotment was published, and in the center of it was the critical increase in quotas for the UAE, who of course have invested billions into raising their supply to 5 million barrels a day. And so my question to you is, what are your outlook for UAE's willingness not to proceed with their increase that they had sort of argued for so long to get, which kicks off in January?
Right. So the UAE's capacity now officially at 4.85, very close to the 5 million target. Probably would be there in the near term. Just signed a new concession with an Indian group. So, the oil expansion program is continuing, at a high pace, and obviously with a lot of unused capacity now. So the UAE's capacity, the UAE's allowable production is set to increase next year anyway. I think absolutely that they would use that. They fought hard for this. They proportionately have more spare capacity than any other OPEC member. So absolutely that they will want to use this. So there will be some oil coming back on the market, I think, next year, regardless of whether the easing of the cuts in general is delayed. And it's obviously kind of one of those structural factors that that OPEC Plus has to deal with, along with the members who are under complying.
I mean, in the middle of, I've been trying to splice that apart and explain it in a press announcement in the end of December would be quite complicated for the market to comprehend. And I'm wondering, from the point of view of OPEC Plus strategy, we've seen rarely but occasionally the group choose to let prices drop a bit, don't fight it, to squeeze out higher cost producers. And in this instance, if they proceed with their increases, then obviously that would, by default or design, have that impact. What are your thoughts of that as a strategy at this time, after giving the sort of non-OPEC plus higher cost producers a real holiday, a bonanza of the last few years?
So I think, firstly, it's that lower price is helpful within OPEC itself, because it's a way of saying to the undercompliers, and in particular Iraq, look guys, look what will happen if you keep overproducing. We're not going to give you a free ride. Prices will fall, and you will suffer. You're one of the most exposed countries in OPEC to a lower budget oil price. I think as far as the other competitors outside the OPEC Plus framework go, with Jose talked about Guyana and so on. I mean, those increases are baked in. These are long-term projects. They're not going to be affected by short-term fluctuations. The one obviously that would be is US shale, and that is the key factor. But US shale has been still, again, more resilient than many people expected to lower prices. Activity has been relatively low for 6 months now in terms of new drilling activity, and yet production is still strong, and the IEA is still keeping up pretty strong estimates for production growth next year. So it's, is $69 going to kill off shale versus 72? Yeah, not really. You'd have to go quite a bit lower, I think.
And it would appear that every year technology gets better and the ability to pull oil out of the shale patch it can happen at lower and lower costs. Survey results 50-50, who knows, is the answer there. And we will take that onto the social channels and see if the wider circle have a more definitive answer. Andy Laven, thank you so much for joining us this morning. Jose Shaloub, as always, great to have your voice back at the table, and no one better than Robin Mills in his space. Thank you, Robin. Lovely to see you all, and I look forward to seeing you all, hopefully in Fujairah in a few weeks' time. Take care.
Thanks, Sean.
Thank you.